During the course of this semester, these Columbia MBA students are going to learn the hard way what it takes to be a good investor. There comes a time when you're not going to spend any more money on gambling, is what I'm getting at. Where are we in that cycle?
Well, I think...
Is that peaked, or is that still growing rapidly?
I don't think it's peaked, and I think what you're saying...
I don't know what you think.
No, but I'm going to tell you why. In Las Vegas, for example...
You're not going to tell what you think. You're going to tell me what you know?
I'm going to tell you exactly what I know right now.
As a beginning investor, the first skill you need to master is to know that it's not easy making money, and it's dangerous. And what we're trying to teach our students is to know everything before you do anything.
The biggest person in this business is DeVry, and they report, and you don't even know that they're reporting.
You want us to buy the stock?
Unacceptable. Unacceptable.
Just ain't easy getting rich. I'm Jim Rogers, and this is The Art of Investing.
On this edition of Art of Investing, Jim Rogers continues his discussion on analyzing companies and industries. And later, one of Jim's students puts classroom theory to the test.
My name is Leslie Mallon. I'm doing oil services.
Stay with us. We'll be right back. This television program is based on an advanced securities analysis class taught by Jim Rogers at Columbia University in New York City. The information contained in this program is for educational purposes only. While you, the viewer, will hear many stock recommendations throughout this program, these recommendations are made by students of this class who are just learning how to analyze securities. We invite you to share in their learning experience. However, we caution you not to follow these or any other stock tips until you have personally investigated the recommendation at length. As Jim Rogers likes to say,
don't make any investment unless you know a lot about it, unless you know so much about it that you know you're right and that it's so right. It's just like money lying in the corner. Well, all you have to do is go over there and pick it up because you've done so much work and you understand it so well that you know you're right.
While the techniques taught by Jim Rogers have proven successful for others, there are no guarantees. Therefore, Jim Rogers, the students, Columbia University, and the producers and distributors of this program cannot be held liable for any success or failure you, the viewer, experience as a result of using these techniques. If you decide to practice the skills taught in this program, you do so at your own risk.
I'm Jim Rogers. We're going to learn how to analyze companies and industries with the idea of making a lot of money in the investment world. So in order to do that, we have to find change. And the kind of change I'm talking about is I'm not worried about next month or next quarter or even next year. I'm talking about something that's going to go on for a decade or 2 decades, where a major secular change is taking place. And if you identify it and buy it when it's cheap and get on board, you're going to make a whole lot of money. So in order to do that, we first have to figure out where the change is. Now, if you're going to be able to understand change and analyze companies and industries, you got to understand the numbers. You may not like that, and it takes a while to figure out the numbers and get a real deep understanding of them, but if you can figure out the numbers and see how they're about to change and understand them, you're going to be way ahead of most of your competitors as investors, and you're going to make a lot of money. It's not easy, it takes a while, it's some hard work, but we're going to learn how to do the numbers first. We're going to learn how to understand the numbers. We're going to start with these spreadsheets, which I have concocted over the years myself. I'll explain to you what all the numbers are, why they're important, and what the significance is in trying to analyze the health of a company, whether there is positive change coming or negative change coming for that matter. Because remember, you buy low and you sell high. Now back to the Redmond-specific spreadsheet and the numbers. The first line on there is sales. Who can tell me what sales are? Matt?
They're how a company makes money, what they receive from selling their product.
It's not how a company makes money. What was the second part of what you said?
What the company receives from selling their product.
Anybody disagree with that? All right, it's not bad. If we're in the shoe business, we sell shoes. It's the amount of money we get for selling shoes. If we're in the business school business, it's the amount of money we get from tuition. It's whatever we do, that's our income. The next line down is depreciation. Who can tell me what depreciation is? Don't be bashful. These are not trick questions. Yes, go ahead. You are
Steve Gray.
Steve Gray.
Would be the value by which a piece of equipment or good that the company owns reduces for that period of time.
Say it again.
It would be the amount in terms of value that a piece of equipment, capital that is owned by the company, is reduced by the company. They choose the method. It can be straight line, accelerated.
That's a good example. That's a good explanation for people who understand what you're talking about. What if they don't have a clue what you're talking about?
A company buys a piece of equipment, and over 10 years they want to, quote, depreciate it, so they take the value, divide it by 10, and each year, if it were straight line method, would deduct
basically,
that value.
when you build plants or buy big pieces of equipment, they cost you a lot of money. The government will not let you just charge that as an expense. They make you depreciate it. In other words, if we build a plant, it costs $100 million, and it's going to last 10 years. Let's say it's going to be $100 million, and it's going to last 10 years. How much will that plant depreciate every year? In a simple way. Richard.
Per year.
How much?
$10.
Richard says $10. Anybody agree with that? Disagree with that? How many agree with that? How many disagree? Brad, why do you disagree?
Well, I thought you said 100 million. Was
That's what I said, 100 million.
So it'd be 10 million would be for 10
Good
years
for you.
depreciation.
Well done. That's right, $100 million. Listen, you go poor. You go straight to the poorhouse, Rich, if you don't pay attention to the tail. I mean, I don't want to be rude, but it's a fast way to the poorhouse, getting a few decimals wrong. Okay? This plant costs us $100 million. It's going to last 10 years. So each year it's going to lose value of how much, Brad?
$10 million.
Right. So every year we have to take an expense of $10 million a year. Now that's an expense, so it's subtracted from our profits, but it's money we've already spent, first of all. So it's not real money going out in the second year and the third year. And if we're looking at a company, one of the things we want to know is how much money they really have to play with, or invest, to spend, to do with as they please. Now, what's going to happen after 10 years? We've been charging $10 million a year as an expense for this factory, even though we haven't been spending the 10 years. What's going to happen in the 11th year? Carl?
Theoretically, your net income on your income statement should shoot up because you're no longer writing that off.
Right. So theoretically, if nothing else happens with this company, in year 11, suddenly their profits are going to go up by $10 million, just because the depreciation has come to an end, if all other things are equal. What's the next line down? Income. It's not a trick question. I just want to make sure you're all paying attention. Just read. Operating income. Who can tell me what operating income is? Yes, go ahead, Marissa. Well, good for you.
Sales minus costs, like expenses.
Essentially, it's sales minus cost, operating costs, what I call operating costs. We're going to get into it more, but Marissa's exactly right. If we're in the shoe business, we take our sales, we take all the expenses of operating the company, including depreciation, and what's left would be our operating profit after everything else. Now, what's the next line down? Go ahead, Max.
Operating margin.
Operating margin.
It's just operating income over sales.
All right. Max says that operating margin is operating income over sales. Does anybody disagree with that? Must have it right. You do. Okay. Essentially, we take our sales. If our sales are $100 million and we have operating income of $11 million, what's our operating margin going to be? Get out your calculators. We sold $100 million worth of shoes. Our operating profit is $11 million. What is our operating margin? Liesl? 11%. 11%. Liesl says 11%. Anybody got a different number? This is really not very hard. 11%. That's our margin. 11%. It's that simple. Now, I want to know that because companies that get more profitable usually get more expensive in the stock market. The prices go higher. If you can find a company whose margins are going to go from 1% to 6%, you're probably going to make a whole lot of money if you buy that stock when it's cheap. Because you can see that even if nothing else happens in the company, the profits are going to go up 600% just because it's sitting there. And if sales are expanding and margins are expanding, my God, the profits are going to go through the roof. And remember, one of the things that makes stocks go up is the fact that a company's profits are exploding. You can find companies where major change is taking place, such as sales are going to go up a lot and margins are going to go up a lot. You're going to get a double and a triple whammy. The company's going to get more expensive because the sales went up and the margins are going to go higher, which means the profits are going to go higher. Likewise, if you find a company's got an 11% margin and the margins are going to be going to 3%, chances are you want to sell that stock short because something's going wrong in the business. Chances are there's too much supply or demand is slowing down or something's going wrong.
When The Art of Investing returns, Jim's oil analyst presents her stock recommendation.
Knowledge TV Retro, brought to you by Jones International University, the first fully online accredited university. Change your life for the better on your schedule. 8-week classes begin next month. Visit jiu.edu to find out more.
My name is Leslie Mallon. I'm doing oil services, and I'm presenting a buy on input-output, which is a seismic manufacturer.
Okay, I would just like to stop for a second, because I would like for every one of you to read the industry section of what Leslie's done, because it's the best that any of you have done that I've read anyway so far. She started off with the industry, and she explained the supply-demand of the industry. She looked at the big picture. She did some extremely good work on the big picture. Whether it's right or wrong, I don't know. That's not the point. She did a lot of work on what the supply-demand of the industry is going to be as her first. And you can't, if you're going to analyze gaming, if you're going to analyze anything, you've got to have the big picture on the industry first, and then we go to the specifics, whether it's aluminum or gold or anything else, and she's done that here. Now, she falters a little bit in the third paragraph where she goes in the inventory. She gets a little short term there. And if I were her, well, we'll get to that. Go ahead.
Starting out by looking at the oil industry, I have 3 main points. Supply-demand dynamics in the industry, the limited infrastructure that I see currently in place, and the low world inventories are all contributing factors to my analysis that the price of oil is going to remain either constant or either be pushed a little bit higher.
Okay, you only have a few minutes. So in other words, there's not much capacity coming on.
So basically,
little capacity, and demand has been outgrowing capacity.
Basically, yes, demand has been outgrowing. I'm sorry.
Cut to the chase.
Now, with the limited infrastructure, with the increased levels of demand, drilling activity has declined, which can be seen through the decrease in the rotary rig count and in the seismic crew count. So basically, there's just not enough infrastructure out there to increase the levels of production.
Is that right? Is that true? Is it true or not true that the productivity per rig has gone up a lot?
The productivity per rig has gone up, but I mean the decline, 15.6% was the decline in international rotary rigs from 1987 to 1994, which is rather significant. And the decrease in the seismic crew count is similarly significant. It peaked in the United States. It peaked at 681 crews, and now it's about 80. So it's a significant decline, and it's on the rebound. They're increasing.
So your case is that even though they're more productive, that the number's gone down by 80%. So,
so the contractors who. So
demand for oil has gone up. The production capacity's gone down. You say your numbers say that, and you're saying that the world inventory levels are low. But are they low compared to what? Compared to 5 years ago, 10 years ago? Compared to the from the beginning of time?
Well, right now, world inventory levels are 2 to 3 days on hand.
What are they normally?
Which is about 5 to 8% below normal levels, according to a gentleman I spoke to at the U.S. Department of Energy.
What were they 5 years ago?
I wasn't able to get historical figures.
What were they 10 years ago?
I'm still working on historical figures.
Well, I need some historic perspective. When you say 2 to 3 days, that may mean nothing.
I understand.
But it sounds to me like your case is, just to get to the company, that basically demand's gone up,
capacity hasn't grown, capacity has declined, inventories are at an all-time low, so at least prices aren't going to collapse.
Correct.
Okay, for all of you who are doing an industry, gold, aluminum, whatever, be sure to get this, because even if you've got the greatest company in the world and the price of copper collapses and your copper company's earnings go up, it's very unlikely that your copper stock is going to go higher. It might. So here's a woman who is bullish on, we'll get to whether she's right or not in a minute, but at least she's saying, look, in this industry, which is dependent on oil prices, the prices are not going to be collapsing. Whether she's right or not, I don't know, but at least she's covered those bases. Go.
All right, the reason why I chose input-output is because, first of all, they're a leader in the seismic equipment. They're a manufacturer for seismic equipment. And so, like I said, with this bottleneck that's happened in the system where there's an increased demand for the seismic contractors out there, they're now expanding rapidly and they're buying more equipment. They're a leader in the land seismic market, and they've just entered into the marine seismic market through an acquisition from Western Atlas.
Does this company simply sell the equipment that the seismic crews utilize, or do they actually provide the service?
They sell the equipment only.
So they don't go out and do the seismic,
No,
they just sell equipment.
they sell to the people who conduct the surveys.
And how big is that market right now, and how big do you think it's going to get? And over
well,
what period of time?
Basically, for the land seismic market, the estimates I've gotten have been kind of varied.
Where did you get what estimates you've got?
The way that I calculated is they have about 70 to 75% of the land seismic market, which would put the entire market at $200 million.
And is the land seismic market growing?
Yes, along with
for the
marine.
same reasons we've just discussed here?
So the contractors buy the equipment is what
yes.
you're saying. Go ahead.
And the marine seismic market is slightly larger. It's about $300 million. They currently have 30% of that market with the acquisition.
Why did Western Atlas say, if this is such a great business, the price of oil is going higher according to you and your stuff, why did Western Atlas, what does Western Atlas do?
Western Atlas is a contractor. And
Western Atlas is a contractor. They had this business. You say the industry is going to boom. You say this particular line of the business is going to boom. Why would somebody in it sell?
Well, according to the company, Western Atlas, what they're trying to do, and with many other contractors in addition are trying to do, is focus in on their core businesses. They're sort of...
They had 30% of the marine seismic business. That sounds to me like a pretty core...
Well, that's because Western Atlas represents 30%.
I understand that, and they sold.
They sold the equipment.
Well, what could be more core than, I mean, if you have 30% of a market, that's a huge amount of the market. Why would you sell out if it's about to boom?
Business, yeah.
If it's about to boom.
Well, they have their contracting business. I mean, the contracting business
they operate
that
the
have,
cruise.
They operate the cruise.
That's their primary business.
That is their primary business. They sold this products group to Input-Output.
Okay.
They have entered into a purchase agreement with them for 5 years.
Okay, Leslie, I understand that. What I'm saying, what I'm having a great deal of trouble comprehending is if there's a company which has 30% of an industry,
they
and
still
it's
have
about
30%,
to boom,
though.
But they sold it to somebody else.
They sold the equipment, but they have 30% of the contracting industry.
What has higher margins?
I don't know, but the manufacturers have pretty high
How
margins.
much do they sell it for?
I can't tell you that figure off the top of my head.
And maybe they
I would
gave
like
a
to know
5-year
both
contract.
of those facts.
So without, maybe they gave a 5-year contract because they know that it's the only way they could get out of this business. Maybe they said, look, we'll buy this stuff from you for 5 years because they know it's a hopeless business. They want to get out.
Have you spoken to...
They sell for stock or cash?
I don't know.
Well, I'd sure like to know. If they kept stock in this new company, then maybe they're optimistic, but they said, give us our money now. I still would like to know why the seller, because there are a lot of business school studies which have shown that the sellers are always smarter than the buyers. Invariably, the people who sell, especially if you've got a big company like this, a product line like this, they know when to sell.
Well, I mean, I guess my logic was if they thought that the equipment itself was not...
I don't want to know your logic. I want to know their logic.
Okay.
I want to know a real hard-ass explanation of why they sold it.
Okay.
You may have said, how much market share does Input-Output have?
Of which market?
The land.
They have 70 to 75%.
They have 70-75% of the land-based Input-Output. Who's second?
Syntron, which is a subsidiary, or I'm sorry, Syntron, yes, a subsidiary of Geoscience.
And is that are they growing too?
Yes, they are growing, but they're much smaller.
Obviously. Yeah. Are other people coming into the business?
No,
General Electric or
actually,
Microsoft or anybody?
No, not that I've come
Well,
across or heard about.
Why did this company's margins go down so much last year?
Their margins went down with the acquisition of Western Atlas, whose products are lower margin.
Maybe you could tell me why the insiders started selling at the same time the inventory went through the roof.
Actually,
and the margins went down.
With the insiders, there's really never been any insider buying, but if
there's been a lot of selling recently.
There's been a lot of selling, not only recently, but the whole way the stock has gone up.
I noticed that the inventory to sales figure's gone up a whole lot. The margins went down a whole lot, and suddenly these guys started selling a whole lot.
I see your point.
Well, I don't have a point. I'm asking a question.
Okay, I don't know.
You started doing some good stuff on the company, but you still haven't gotten it all together in looking at more or less the competitive situation, the actual demand for this product, what the competition is doing, why some people sold out, why the insiders were selling. There are a lot of questions which remain unanswered here. This is a very high multiple stock, so if you're going to recommend us to buy a stock which already sells at a very, very high multiple, that means everybody knows the story, or it wouldn't be at a high multiple. You got to answer all the questions and make sure that nothing's going wrong. Otherwise, with a high multiple stock, if even a small thing goes wrong, you're going to lose a lot of money if you own it.
It's not enough to know everything that's going on in the industry. You got to know everything in the company as well, and then tell me whether to buy it or sell it. Now, I don't know if you're right or wrong, and nobody will know. The market in 6 months will tell us who was right and who was wrong, or a year. We'll all know if Joe says buy X, or if Joe says sell X. I don't know if he's right or if he's wrong. I have my own views, obviously, but we won't know for a year. But if he's done all his homework, touched all the bases, and comes up with a coherent and rational argument as to why I should buy that stock or sell that stock, he'll get an A. Now, there are people who've gotten A's where I totally disagree with their recommendation. Totally disagree. But if they've done everything that there is to do, they've come up with an analysis which is legitimate, then I have to give them an A. But then other people who fail this course, who come in there, and I know they're right. I know they've come to the right conclusion, but they don't have a clue how they got there. They'll fail the course.
Knowledge TV Retro, brought to you by Jones International University, the first fully online accredited university. Change your life for the better on your schedule. 8-week classes begin next month. Visit jiu.edu to find out more.